Welcome. I'm Catherine Magana here with Rachel Ivanovich, Vince Stefano, and Greg Carroll. And today is June 4th. And this week has been quite the week here at WWM. Vince celebrated a birthday this week, and we have Rachel celebrating a birthday on Saturday.
Hey, there you go.
Yes.
Two babies.
Two babies.
There's
We love our birthdays.
I know Greg had a birthday recently.
A lot of Geminis at this table.
I just happen to be a little older than Rachel.
A lot. Let's go with a lot.
So definitely,
You're setting the bar high, though, Vince. Good job.
It's definitely a lot of celebrations here in the office. But this news still out there is now we're 100 days into the war with the U.S. and Iran, and there's 170 ships that still remain in the Persian Gulf. So it doesn't seem, you're still seeing a lot of different headline news, but we're still, I don't know how quickly this is going to get resolved, but that's definitely still top of mind. Looking at the markets, so as of yesterday's close, which was June 3rd, the Dow Jones was pretty much flat over the last week. However, as of this morning, which we don't know yet where the markets will end at the end of the day today, but as of this morning, the Dow Jones is looking that it's going to be up about over 1.5% to 2%. And the healthcare and the financials are really leading that today. But we'll see what happens between now and the close. But over the last week, we were pretty much flat. We ended up at 5.46. The NASDAQ was actually up slightly from last week to this week, even though it's down a little bit today. But it was interesting as I was looking, there was a mega tech stock that reported earnings, and it's one of the leading AI company providers. And it's interesting, their earnings came in strong, but the AI forecast is disappointed, and so that's really affected the market, and I'm sure Vince will tell us a little bit more about that.
Stealing your thunder.
And then, the S&P 500 were up slightly from last week to this week. It's up about 10.35%, and the Russell 2000, which is a small caps, are down from last week, and we're at about 16.58%. So not too much movement over the last week, but obviously it feels a little different because every day seems like the market's been a little volatile. Looking at kind of where we're at with interest rates, not too much of a change in the one-year CD and treasuries. Our one-year CDs at 4.05 and the one-year T-bills at 3.95. So pretty comparable right now with the yields. And then mortgage rates, slight change from last week to this week. We're down just slightly. The 30 years at 6.52 and the 15 years at 5.89. And then looking at kind of the probability of a rate change at the next meeting in June, there's pretty much the probability is 96.4, so we're not looking at any change coming up. But kind of looking at the probabilities of future meetings, the one that really stands out is the December 9th, 2026 meeting. There is a 42% chance that they're holding rates steady, a 40% chance that they'll raise rates. So once again, between now and then, I know there's been a lot of talks about the economy and if rates will go up or not between now and the end of the year. So it doesn't seem like there was a lot of market movement recently, or it's moved a little bit, but at the end of the day, it's been pretty much the same over the last week.
Yeah, I think it's been interesting, like you mentioned, and I know Vince will go into this in much more detail, but when you get these good earnings announcements and there's just a slight hesitation with future guidance, and these things can sell off really big, but you've also seen some that have good guidance. They grow 30% in a day. And these are $300 billion companies. It's pretty remarkable, some of the moves we're seeing. So I'm curious what your thoughts are as far as, where this market is at, given we're at all-time highs, and we keep setting new all-time highs. How frothy is it? And then we got to hear about the Fear and Greed Index, which I'm very curious about.
I'm sure that may climb a little bit. Anyway, I don't know. There's a lot of talk now from the big Wall Street firms about S&P 500 being at 8,000 by year end. And, however...
It's not that far away.
It's not that far away. I only think you're talking about 6% or
yeah,
5%.
It's not like a big move from here.
Yeah. But still, 8,000 in the S&P is pretty good. A lot of continued concern, as Catherine mentioned, about the war in the Mideast. But the markets continue to push higher, and we're seeing stronger earnings. We're seeing the war. I think the market's thinking the war may end soon. And even though there are concerns about inflation maybe ticking up, which would lead the Fed to possibly increased interest rates, the market's also thinking, on the other hand, if there is a resolution in the Mideast soon, that oil prices would come down and inflation would come down with that, and that would be very beneficial for the market. So, all of that, the market's been resilient, and it continues to climb a wall of worry. However, as Catherine mentioned, there was some weakness in some very high-profile semiconductor and technology stocks. And this is a case in point. A major semiconductor company, they beat the consensus on the bottom line, and that was great. Revenue rose 48.9% to $22.2 billion, which puts this company at an annual run rate of about $89 billion. They guided Q3. This is the crazy thing. They guided Q3 revs up 84% to $29.4 billion, which puts the company on an annual run rate of about $118 billion. And all management kept saying on their conference call and in their comments was an insatiable demand for AI, and their future bookings are well above their shipments. So that means that their recurring revenue streams are going to be much higher than their revenue. However, stock's down 15% today. Why? Because, and it's taken the whole semiconductor space down.
Yeah.
Why? Because instead of growing at 84%, the street wanted to see 85 to 86%. Now, when you're talking a $30 billion for the quarter run rate, that's amazing.
That's a lot of money.
So, the street gets expectations well above reality. And unfortunately, this is where the opportunities arrive. So again, as we start seeing more and more resolutions to some of the crises around the world, I think money is going to continue to flow into the U.S. stock market, and we may see more than 8,000 on the S&P for year end. And where is the fear and greed index?
All right.
That's important.
Yeah, so it's kind of interesting when I look at that. So last week we were at greed, which was 61, and this week we were at 54, which is neutral. And so which is kind of interesting that where we're at. We're on the 1 point away from greed, but it was just, I was surprised that it was actually back.
It's fluctuated a lot this year.
It has.
Didn't it go down to 13 at one point?
Yeah, back in when the war
March,
started. Yeah. I'm wondering if Trump's getting bored with the war, because you haven't heard all his tweets lately, right? I mean, there's a lot less tweeting going on, so maybe he's looking at something else now. Who knows? Maybe they can figure that out.
I did see a tweet he put out, and it had something to do with, that we continue to hold all the cards, and that. But he keeps saying this over and over again.
He's been saying that since it started.
So I don't. And again, the market's not reacting so much to Trump tweets as they are to earnings forecasts, earnings, and prices of oil and all of that. So
Right.
And the market, that's what it looks at.
But I think the longer this goes and we keep talking about it, the price of oil is going to go up if this thing lasts much longer. We're really drawing down a lot of the reserves around the world. And I think that once they do open it up, whether that's tomorrow or next month or, God forbid, longer, I mean, the price of oil has got to stay higher because it takes, 60, 80 days to take a ship to fill it up and get it to Europe or Asia, and then they got another 60, 80 days to get back there to fill up again. And then they got to refill all these reserves. So I'm a little concerned about, energy this summer. And flying over to Europe or Africa like Vince is, you cross your fingers that they have jet fuel to get back. It's not a bad place to be stuck, I guess.
I don't know. It depends where I'm stuck.
Well, that's true.
So over the last week, we met with a prospective client who inherited some money. That she inherited the money, so probably about in year 2020, so during the COVID year. She was new to investing, and at the time in 2022 is when she started investing with another advisor. And unfortunately, if you recall, in 2022, the stock
year.
market was down, the bond market, everything fluctuated and was down. And so she was really nervous and scared about investing, ended up taking money out. And so here we are
While
now.
the markets were down.
Yeah, and so here we are now revisiting and educating, because once again, part of this is making sure you have the right risk profile, the investments, and what's the purpose of the money. And so one of the things that we're looking at is because she has a decent amount of cash set aside now, that what's a way that we can help her, but we're not going and saying do everything day one. We're really coming up with a plan and strategy to help her over time.
Yeah, and one of the things we noticed was we reviewed the tax return, and we noticed that she had almost $200,000 in capital loss carryovers,
From
most
various,
likely
yeah,
because she
investments.
got scared and jumped out when the markets were down. But that helps now because we can look at the accounts, the taxable accounts, and sell off certain positions, and there will be no tax impact. So it's always important to look at your tax return.
Exactly. And then I just came across this morning on the Wall Street Journal an article. It said, "Forget the inheritance. The readers are passing down their money now."
Ooh, be
And
careful.
so that kind of sparked, it was kind of interesting looking at this, and we do see this pretty frequent. Is a couple of things that came up were, one, traveling with family, kids and grandkids, so that's been part of of having the experience. Two is down payments for homes. So some families are now saying, okay, I'm going to help with the down payment. Some are saying, well, now I want to help with the grandkids, maybe some education accounts or preschool. And so what we're finding is, and we have these conversations periodically too, is, you know, grandparents want to help, or or parents want to help their kids and grandkids. And so there's nothing wrong with that. It's just, how does it fit into your overall financial plan? Once again, is there any tax consequences? Which Rachel,
I'm biting my tongue over
right?
here.
Rachel's like, well, what is it exactly you want to do? I think we touched on it last week. Where,
We've had a lot of people recently who've said they want to give away money now while they're still alive, and you need to be very mindful of the tax impact of what asset you're giving away, because if you are gifting an appreciated asset, such as a piece of real estate or some sort of stock portfolio, whoever's receiving it will not get a step up in basis. They'll have the carryover basis. So that means whatever you bought it for, that's what they will have. If you pass away and they inherit it, they get the stepped up basis. So
be careful
of
what you're doing and how you're doing
correct.
it.
I've had several clients add family members to the title of real estate, and then they don't realize they don't get that step up in basis. And so the tax impact later is they come to me crying because they didn't make the plan ahead.
So cash
Cash,
is king.
correct?
Give them cash.
Correct. And one of the questions we often get also is, if I help with the down payment on a home, then do I have to report who pays the taxes on it? Well, there's really no tax impact when you are giving money for a down payment. However, you want to be mindful that you may have to file a gift tax return if you're over the annual amount that you can give annually.
Was that 19,000 per
19,000.
person now?
Per individual per year. So if you're married, you each can give, and if they're married, you can double, so it's triples, quadruple,
something,
yeah. Yeah. And if you gift directly to, you mentioned grandparents helping with education. If you gift directly to the institution, then that doesn't count as part of your annual amount. So that's another way to help.
So tax deadline's coming up, right?
Tax
The
deadline's coming up in
estimated.
11 days. So June 15th is the second quarter deadline for estimated payments. If you own a pass-through entity such as an LLC or an S corporation, and you'd like to make the pass-through entity elective tax payment, that's due June 15th as well. It's a tricky little workaround to save money.
My wife was listening last week about you talking about the tax deadline come up, so she's talking about doing taxes this week. And
Review your income and
Gotta
pass
get
it
that
along
check
to your
ready.
tax professional. That's right. It's due June 15th.
Cool.
All right. I think that covered a lot. Rachel, do you have
I
anything
wanted
else?
to chat a little bit because I've had several people call in and ask about charitable gift annuities, and these are not for everyone. However, they're contracts that you donate assets to a charity in exchange for a lifetime fixed income. And so you would donate cash, you can donate appreciated stock or property, and then you do receive fixed payments and tax benefits, and then the charity gets to keep the remainder after you pass away. And there are a lot of pros and cons to this. Like I said, it's not for everyone, but I mean, the pros would be there is the steady income for life, tax write-off, and partial payments that are tax-free. When you receive those payments, you get to support a cause you care about, and it does lower capital gains. There was something that we touched on. We had a client who called in and wanted to know about a new rule that pertained to the charitable gift annuities, and it has to do with funding a charitable gift annuity from an IRA. So basically, you can do a one-time qualified charitable distribution from your IRA of $50,000. You have to be over 70 and a half to do this, and it is new as of, I believe, 2019, but it's a little bit complicated, so you definitely want to check in if you're interested in this. One of the cons of doing a charitable gift annuity is it is irrevocable. So once you've made that decision and you give the money, that's it.
It's gone.
The money's gone.
I was going to say,
Income stream.
I was going to say, do you get stuck in an annuity for
Yes,
the rest
exactly.
of your life? Yeah. That's,
Well, you're just getting an income stream. You're not in an
Correct.
annuity. You're an annuity because you got the equal payments coming for the rest of your life.
But you got to
So-
exclude, let's say if you do it from an IRA, you're excluding $50,000 from your overall balance, which
Right.
lowers
so
your overall.
Who pays you? An insurance company?
It's the charity.
But they
That's
must
my
contract
understanding.
with an insurance company to
Most
pay you.
most
Yeah.
likely,
Yeah.
yeah. I don't know the ins and outs of that, but I can tell you about the tax consequences.
I see.
But we have had several people ask
it.
about them, so I thought it was worth mentioning.
I think the key is if you're inclined to give money to a charity that you've been supporting a long time,
Correct.
and you just have a lot of money and you'd like a little income
And you want to
stream.
reduce your overall required minimum distributions for the
Exactly.
future. It's a way of taking $50,000 out of it and sending it
Yeah.
to a charity, and then they get the benefit from it.
Exactly.
Well, it's June 4th. We're already, middle of the year. So at this point, if anybody's interested in a mid-year review coming up over the next few months, please let us know. We're happy to meet with you on Zoom, in person, or schedule a phone call. And I know we've covered a lot of ground. If you have any specific questions or need any help, please reach out. Otherwise, we want to thank you for joining us today.
I have one thing.
Oh, yes.
Trivia. This is trivia.
Oh.
Okay,
Oh.
this is trivia for
All right.
anybody. All right. Over the past 31 years, the number one dog breed in the U.S.
Dalmatian.
is the Labrador Retriever.
Oh,
As of this year, the new number one dog breed
Frenchie.
is the French Bulldog.
really?
I knew it.
Oh.
Just go downtown. They're everywhere.
So
are.
anybody
I've got some friends that have
who
it, yeah.
owns a French Bulldog, America loves your pup.
There you go. All right, that's a trivia fact for today. Well, once again, thank you for joining us, and we'll see you next week. Thanks.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.